Welcome to Comply on the Fly with M3 and Karen B, your trusted resource for quick, reliable insights into employee benefits compliance. Each episode delivers clear answers to common compliance questions. Whether you're tuning in for the first time or you're a seasoned listener, we're here every other week to make navigating compliance a little easier. Please note this podcast and the contents herein do not constitute legal advice. In all cases, employers should consult with their own legal counsel. Let's dive in.
Hello, everyone. I'm Karen B, and the Comply on the Fly topic for today is 2026 ACA Shared Responsibility, specifically the 2026 Affordability Percentage and penalties. On July 18th, 2025, the IRS issued Revenue Procedure 2025-25, indicating a change in the affordability percentage for 2026 to 9.96%, which is up from 9.02% for 2025. This is the second year for which the IRS has increased the percentage. So let's review what this means. The Affordable Care Act, or ACA, shared responsibility provisions require applicable large employers, ALEs, those are employers with 50 or more full-time and full-time equivalents based on a previous year calculation, to offer health coverage to full-time or 30-plus hour employees in order to avoid penalties. So what are those requirements to avoid penalties? First, employers need to offer to at least 95% of their full-time population to avoid a big penalty that would be assessed on all full-time employees if just one full-time employee goes to the marketplace, enrolls, and receives a subsidy for coverage. And second, offer affordable and valuable coverage to full-time employees or pay penalties for those individuals that enroll in marketplace coverage and receive a subsidy. For purposes of this episode, we are focused on the affordability. You would take into consideration the lowest cost single coverage option that you offer and look at the employee premium contribution that you require for that plan. In planning for 2026, the single contribution amount cannot be more than 9.96% of the current federal poverty level or the employee's wages for the amount to be considered affordable. There are 3 safe harbors to consider when making this determination. We always suggest starting with the federal poverty level because if you can satisfy this safe harbor for all full-time employees, it does not require you to do calculations for each employee based on what they are actually paid. With the new affordability percentage, the federal poverty level safe harbor limit in 2026 will be $129.89 per month. Of course, this is done by taking the current federal poverty level of $15,650 and multiplying by 9.96% and dividing by 12 to get the monthly rate. The next safe harbor to look at if you cannot use FPL would be rate of pay safe harbor. This would require you to consider hourly employees by taking their hourly rate times 130, and that's a constant, and then multiplying by the 9.96% for the maximum monthly employee contributions. For salaried employees, you would simply take their monthly salary times 9.96% for the affordability limit. The other safe harbor would be the W-2 safe harbor. The same calculations would be used, but this time you would look at box 1 wages for the current year, which would be 2026. This safe harbor is difficult to use because you wouldn't have the 2026 W-2 for the year in which you're making the offer. And remember, you can use different safe harbors for any reasonable categories of employees, provided you do it on a consistent basis. Reasonable categories include specified job categories, salaried versus hourly, geographic location, and other bona fide business criteria. In addition to the 2026 affordability percentage, the IRS released Revenue Procedure 2025-26 on July 22, 2025, indicating increases in the applicable penalties for 2026. Penalty A, or the sledgehammer penalty for not offering to 95% of full-time employees, increases from $2,900 in 2025 to $3,340 annually in 2026. Penalty B, or the value affordability penalty for not offering valuable or affordable coverage to a full-time employee, increases from $4,350 in 2025 to $5,010 annually in 2026. And that is your Comply on the Fly topic of the day. Thanks for tuning in.
For more employee benefits compliance insights from Karen B. and her team, please visit m3ins.com.